everybody. Welcome back to the Meebits podcast. I'm Sergio, and I'm wearing a suit because I have a very special guest today from the TradFi world, our Meebit collector as well, Teddy Fusaro, president of Bitwise. Teddy, welcome to the Meebits podcast.
Thank you for having me. Great to be here.
It's amazing. Thank you for taking the time. I know you guys have been really busy. You're always busy, and we'll get into why and how, but especially recently with the launch of your new Solana staked ETF, BSOL. So thank you so much for being here today.
You're welcome. It's great to be here. We are busy. We're cooking, a lot going on. Very excited about the BSOL launch, but really happy to be here with you on the day before Thanksgiving, no less.
The day before Thanksgiving, yes. So definitely appreciate that. Let's jump right into it. Could you give us a bit more about your background? Who is Teddy? I think you're on the timeline. You're very personable. You share a lot. But for those of you who might not follow you yet, what's your origin story?
Yeah, great question. So currently, I'm the president of Bitwise Asset Management. We are a crypto asset management company, which we'll get into a little bit more as the program unfolds. But primarily, we put cryptocurrencies, digital assets into traditional investment vehicles and help normal investors get access to these exposures. So I'm the president of this company. We're over 140 people now, which is wild to me. We started in 2017, where it was just classic startup story, venture-backed startup with a few people in a room getting started. And so I've been doing this, working at Bitwise since the beginning of 2018. Prior to that, I had a career in what we in crypto call TradFi. And so I'd started my career at Goldman. I spent a couple years at Goldman before getting into the ETF industry. And in the ETF industry, which at the time, I don't want to date myself too much here, but this was 2009. And at the time, like the ETF industry was, I wouldn't say it was brand new, but it was still emerging as something that was going to be a big factor in the wealth management and asset management space. It was still a bit novel. It was emerging. And so I spent the better part of a decade in two different early stage ETF issuers. And I worked at companies that were doing alternative types of ETFs, so non-standard, something beyond plain vanilla. And the second one of those ETF issuers we sold. It was a startup company. We sold that to a large asset manager. And it was during that transitional phase after we had made the sale, and while I still had to stay there, that I personally began getting into crypto. And so after I had personally gotten into crypto, I met Hunter Horsley, who is the founder and CEO of Bitwise, and managed to convince him to let me help him run the business and grow the business. And so that was 8 years ago. And
in crypto time, that's like 28 years, I believe.
Yeah, it is. It's amazing just in this period of time how much the industry has gone through, how many good times there have been, how many challenging times there have been. 2024 and 2025 have really been, but by any measure, the best years for the industry. So I think really excited about that. So that's a little background on me.
Love it. Thank you. I think when we first met, we shared a lot of our similar experiences on ETF desks before coming to crypto. I think you did the smart choice by going into the merging worlds of crypto and TradFi, and I went off the deep end of the NFT.
Yes.
Black hole, rabbit hole. But I think it's good times up ahead for everybody involved in the crypto industry. I agree with you on that.
Yeah, I mean, I think back a little bit, like 2018, 2019, those bear markets, those drawdown periods were times where, man, there were certain days, weeks, months where it was kind of hard to imagine how the industry was going to pull out of it. We just didn't have the institutional players, and we also didn't have the talent in the industry quite yet. And I at least sometimes would look around and be like, man, there's not a lot going on Like there's that meme of like the stick figure with the stick that's poking at something saying do something. And I felt like there were stretches of time during those pullbacks, drawdowns, dead zones, where that's kind of how I felt. And now, I mean, obviously recent price action in the crypto space has been negative. We've drawn down from the highs in October, but the infrastructure and the people and the companies that are involved are so different now, that it's just it's a categorically different type of environment at this phase.
Yeah, I feel like you always see the disconnect, especially when you have been in like the traditional, either more like side of crypto and or other industries and coming into crypto, between the sentiment on crypto Twitter and really what's happening. I saw it firsthand when I was at Fireblocks back the previous cycle. What do you think are the biggest misconceptions about like what you do on Bitwise or the overall asset management industry within crypto does versus what people think on Twitter think that you do?
Yeah, I think there are a lot. There's a lot to unpack there. Like we were joking about this before, but like you'll see tweets sometimes where BlackRock's Bitcoin ETF will have an inflow. And you'll see like a big Twitter account say that Larry Fink bought Bitcoin, right? Like that's not how any of this works. What we do, what asset managers do, right, is we create investment products for investors to use. We ourselves aren't the ones who are increasing the AUM by making more investments in the fund. It's our clients, it's the end users. So a great example is Bitcoin ETF. Like BITB is the Bitwise Bitcoin ETF. It's one of the largest Bitcoin ETFs in the US. It listed on the first day they were available at the beginning of 2024. It has about $5 billion worth of AUM in it. But when the Bitcoin ETF has increases in AUM, meaning there's money coming into the Bitwise Bitcoin ETF, it means that there are hundreds of thousands of investors that we don't even know in many cases, that Bitwise doesn't know, that are either pointing and clicking in their Schwab or Fidelity retirement account or brokerage account, or that have a financial advisor that's made an allocation decision on their behalf. And those are the people, those are the investors that are buying the Bitcoin ETF in a brokerage account on the secondary market, which is causing the inflow to happen. And then as a result, the ETF itself needs to go out and buy more Bitcoin. So I think there's this misconception that like Bitwise or BlackRock or an asset manager is doing the buying like on their own behalf, where in reality, it's all these investors that are out there that are making their own decisions, or their financial advisors making their decisions, which is leading to either inflows, buying of Bitcoin, or outflows, selling of Bitcoin. And I think that's one of the common misconceptions that's out there.
Yeah, it always cracks me up. But I think it's interesting because it showcases how asymmetrical sometimes the information is, both online and like with the retail, individual that's participating in markets, not just crypto, but overall, and then the professionals, not that they're better people, but that it's like what they do day to day and really understand the mechanics of the market.
Totally. Like I think that one of the big lessons that I have had at Bitwise and that Bitwise has had as a company is that education, first and foremost, is the most important thing for us. And it cuts across like all swaths of the industry and all readers, listeners, followers. If I take it back to just our business, we've always found that crypto, Bitcoin, NFTs, all this stuff is new. And it's something that what we need to do first, what we think our mission is to do first, is to educate investors about it. And many times, I think like there were, we did not have a significant amount of growth, 2018, 2019, 2020, but a lot of that time we spent building foundations, building relationships, coming back in with educational content, starting with what is Bitcoin? what is a blockchain? What is decentralization? Why does it matter? And then in many cases, it takes years of that education. And then there's a point at some later stage in the journey when those financial advisors or institutional investors that you were providing that education to become ready to make an investment. It's not really, we've never found it as our place to tell investors when to make an investment. It's more that we have the belief that if we provide the education and the relationship and the resources over time, that then eventually, as the light bulb goes on with all of us that have spent time in this industry, they will be ready to arrive at that conclusion on their own. And just to tie it back to what you said about information asymmetry, I think one of the things that we see in crypto is like crypto people think they've invented everything, right? and the reality is, no, we haven't. Like, there's a new technology that we have here. There's an emerging asset class, but all of these things, all of these concepts have existed before. And so the asymmetry of information is like, a lot of crypto people are learning about ETFs for the first time, or learning about the dynamics, demand, supply, and how those get fed through to pricing mechanisms. And so I think that we feel that we speak to both audiences. We're often providing education to crypto people, and we're providing education to professional investors in quote unquote TradFi.
I think that's so important. Actually, when friends, family ask me, how do I get started in crypto? First thing I tell them is like, you don't need a penny.
Right.
What you need is a couple of hours of understanding, what it is, how it works, why it works. And then, because then you can actually like develop a view.
Yeah.
And express that. I want to go back to something you said about, spending a lot of time educating institutionals and clients. I was on a panel at the Real Vision Crypto Gathering back at the beginning of the year with one of your colleagues, Matt, who said that you guys had logged, close to 10,000 meetings, even before the first Bitcoin ETF was approved. What's like the, it's called demographic breakdown of those types of conversations? Who's Bitwise mostly talking to? Has it changed, that period before the ETFs went live until now and in the future?
Yeah, absolutely. So our chief investment officer, Matt Hogan, is who you were referencing there. I think he's the best CIO in our space. He's someone whose content I always read, and I listen to his podcast and to the pieces that he puts out weekly. He was talking about the financial advisor market. So a thing that's like even in TradFi circles is often widely unappreciated is how many financial advisors there are in America and how much wealth they collectively oversee. So most estimates are that there are about 30,000 financial advisors in the US, and they collectively oversee something like $30 trillion of wealth. And we hear about hedge funds all the time. Hedge funds are like 3 trillion. So it's just like, that gives you a sense of how big that market is. And what do these people do? These people are often entrepreneurs themselves. They may set up shop on Main Street in Westport, Connecticut, or on 6th Ave across town in the UBS building. And they want to go out and find doctors and lawyers and dentists and other mass affluent Americans who need help managing their wealth. And that has been a difference between how Bitwise has grown its business and how many other crypto companies have built their business over the last close to a decade now, which is, we said, that's the market that we want to educate, talk to, market to, support, and have be investors in crypto. And so when Matt talked about doing 7,000 meetings before the Bitcoin ETF launch, I think we're slated to do something like 20,000 meetings this year. I'm sorry, 20,000 calls this year. Those are the people that we're going after that we want to educate and talk to about crypto. And it's also the market that's still very early in their crypto journey, because oftentimes these advisors are running their business on top of a custodian or brokerage platform where they need like home office approval of investment products so that they can actually put them in their clients' portfolios. They need very different things than a retail investor needs. Like me or you, we can open up a Coinbase account or a Kraken account, or we can go to Uniswap and mess around with tokens and connect a wallet. A financial advisor needs to be able to answer questions from their clients. They need material, they need content, they need to be able to call someone if they have a question. And so that's the model that we've developed at Bitwise, is how can we build relationships with, educate, and then serve this market so that over time, crypto can become what we believe it will become, which is an emerging asset class that deserves a place in these types of investors' portfolios. And so that's how we've built the business. That's been one of the goals, is to educate and serve that segment of the market. And I think it's still very early in that journey.
You just answered my next question, which is, so it sounds like we're very early. What is your, let's say, 5-year outlook for what you guys do, right? Asset management that straddles crypto and the more traditional finance side of the world.
Yeah. So the way to think about how those types of financial professionals manage money is like, often there is a model. A model will be like, just think of it as a spreadsheet, right? And the spreadsheet says 60% stocks, 30% bonds, 2% gold, 1% alternatives, whatever it says. There's a model, so that and there's likely multiple models, because if Teddy and Sergio walk in, we're 26-year-old guys, and we have a longer time horizon and more risk. So maybe we have more risky assets in our portfolios because we're longer term time horizon. And if our parents walk in, they need a different type of advice, right? The reason that I say we're so early on in that journey is because Bitcoin and crypto still doesn't have an allocation in those models. And what our expectation is that over time, Bitcoin does become an allocation in those portfolios. And then what happens? Every time a individual who has wealth that gets put in their wealth management account gets allocated across that model. And that will include an allocation to Bitcoin or to crypto or to many different types of crypto. And as we know, supply constrained asset, fixed supply. Over years and decades of this happening, there is not enough supply to meet the demand. And what happens? Price resolves upwards. And so that's my baseline expectation. I think that it becomes a part of standard wealth management investor portfolios over time. I think likely we start at very low single digit, or even not even a full percentage allocation. But as the portfolio diversification benefits demonstrate themselves over time, that will increase. And that's basically what we see as the vision for the future.
Can't wait to see it.
Yeah.
But meanwhile, as you look ahead, and obviously regulation has changed a lot over the last, call it, 12 months with the new administration. And I think there's some green shoots as to further legislation coming down that'll be good for the crypto industry, at least here in America.
Yeah.
So that, which was probably the biggest challenge that we had going into 2025, is partly removed. What would you say are the biggest challenges now for the crypto asset management industry going forward?
Yeah, I mean, just to kind of like underscore what you said about the biggest challenges before, like the prior administration under the former SEC chair, Gary Gensler, was really, really difficult to operate a business. The only reason that we ended up getting the first crypto ETFs, the Bitcoin ETFs, is because a company, Grayscale, actually sued the SEC and won. I mean, that is a sort of unbelievable set of circumstances that a company had to go and sue the SEC to get approval to get these products launched, and then they won, and then they happened. And then what happened immediately thereafter? We got the Bitcoin ETFs allowed. They came to market, and they were the most successful ETF launch in the history of ETF launches, which is crazy when you think about it. Like ETFs now, I talked about, getting into ETFs sort of early in the industry. There's one lens through which you can look at ETFs as the most successful financial innovation of the last 30 years. Like they're the primary building block of most investors' portfolios now. And market penetration is still growing rapidly year over year. They still haven't caught up to mutual funds, and they're gonna take over time. So that environment where you had the primary regulator was blocking things and making it very difficult to operate is a stark change from what we have now. What I think is coming with the things that we need to deal with as an industry. Legislation you mentioned, there was stablecoin legislation was passed earlier this year. Market structure legislation would be very helpful. And then I think the big thing to navigate for asset managers broadly, crypto asset managers more specifically, it's very close to home for us, is what happens when the financial world does go on chain. I think that the financial world is going on chain. What does that mean? How do you implement it? What kind of products do you have? What kind of skill sets do you need? How is that different from the ones that you had previously? What are the different risks that are involved there? I think it's going to be a big, dramatic change that is going to be bigger than even the enthusiastic people see right now. And I think that we have the new SEC chair, Paul Atkins, has said that he wants to see this happen under his administration. He wants all assets to go on chain. And so I think this is a big transition for not just Bitwise, but for the financial industry, is how are we going to navigate this transition together? And that's what I think the big thing is going to be that's in focus over the longer term.
Love that. By the way, Gary, if you're watching, we won't ever forget. You mentioned, the traditional finance world coming on chain. I've seen it personally with my former colleagues and friends who still work at Fireblocks.
Yeah.
They're just nonstop busy. We're seeing, institutional wallet providers getting bought out left and right. Just another announcement recently, one of their competitors. Like it is.
Again, the Fortify deal?
Yeah, Fortify.
Yeah, with Paxos?
Correct. And so I think that if you look at, those kinds of news, going back to the first question, what crypto Twitter and the noise there versus what's actually happening in like the broader industry itself. It's what, like, to me, those are the big signs, and not whether, some coin or NFT or whatever dropped, 15, 20% in a week or two because of things.
Yeah.
How do you divide, or I guess filter the signal from the noise?
That's a great question. The answer is I don't know. It's really hard, isn't it? It's really hard. One of the things I tell people who join Bitwise from we hire a lot from traditional financial roles, like both of us, right? We used to work in Wall Street jobs, and a lot of times, like, the big trepidation that these people have is like, hey, I'm really interested in this emerging asset class. I've read everything on your website. I'm excited about Bitcoin, but like I don't understand it all. I don't know all of these crypto things that are happening. And one of the things I tell people is I've been doing this since the beginning of 2018, and I feel like every day there's something that I don't understand that I need to try to learn, that I need to try to figure out. Do you feel you know what I mean? Like,
and it is funny, right? Because there's like stuff that you need to learn, but there's other stuff that is completely superfluous, and then you get caught up in like the drama sometimes. Or like, does the question, like, how does Teddy sit there like online, because obviously this whole information is disseminated online, and like filter what you think is important that you have to learn and what might just be the little micro meta of the day.
Yes, and I think this is a big challenge, is figuring out what is important, what are the themes that matter. And we have one thing we have is we talked about Matt earlier. We have an amazing research team at Bitwise that stays focused on the things that matter, looking at things like developer activity, use cases, what clients are going to care about, and then trying to figure out how you can skate to where the puck is going. And I think that's like the thing that is challenging is like, I remember like years ago when we first launched we had a private DeFi index fund. And the question I had at the time was like, this DeFi stuff, is it a real thing? And I remember us saying at the time, yeah, it's a real thing. What's happening in it now is like edge area experimentation with how these primitive ideas can work. But the ideas are really important. So I think it's looking for the big ideas that actually matter. And that's why, like, to take it back to DeFi, like borrow, lend, decentralized trading protocols, these things are actually much better ideas financially in a baseline sense than the way that things operate now. I think about prime brokerage businesses, for example. Like, ultimately, prime brokerage businesses globally do like $40 billion of revenue. And it's very opaque. Like, even the biggest hedge funds don't really know why they're getting charged what they're getting charged for stock borrow, for example, right? But then think about like borrow lend protocols. If we had tokenized stocks and long holders could make stocks available for borrow, there could be transparency into that whole process. Who does that disintermediate? That disintermediates Wall Street. Right? It disintermediates prime brokerage businesses. So I think it's like really hard to answer your question more directly. Like, how do you filter through what is noise and what isn't? It's looking for the big ideas and thinking about how those could actually make real business disruption in the future. But I get very distracted by all the content, that's for sure.
Well, you just brought me back to 2008, my summer internship at GS. My first rotation was on the prime brokerage desk. And I remember, my projects were to like optimize the spreadsheets that we were using to reconcile positions from some of the biggest hedge funds in the world. And like, it was run on Excel.
Yeah.
And I was like, and they were giving it to the intern to make it better. And I have no idea. Hopefully that's changed a little bit since then.
I don't know. I don't know.
But I agree with you. I think there's a lot of opportunity there for and again, it takes like knowing the actual business. That's why I think it's great when people come from those backgrounds and they merge with the people like here who have those new ideas, can see things differently, can understand the building blocks that crypto provide, and you put them all together in this like virtual room and have, people call it like, development of a new financial system. And I don't think that's exaggerating. I just think it's going to take time to get there for all these things to marinate and really produce, the outcomes that I think a lot of us can agree are coming.
Totally right. I think one of the things that we've done a really good job at Bitwise is we have people who have both backgrounds. And I think one of the things when we talk to clients, obviously we want to win business, so we're always trying to win business. But when I talk to our clients, when Bitwise talks to clients, we say, of course, it'd be great if you worked with Bitwise. We want you to work with Bitwise, but something that we recommend you look for if you're making investments in client portfolios is teams that have backgrounds in both crypto, blockchain, software, and traditional finance. Because I think it's really the marriage of those two things that can create positive results. Like Bitwise can't have the success that we've had without having both Hong Kim is our chief technology officer, who has a deep understanding of blockchain, software development, how they work, what the risks are, and someone like me or someone like Matt, who spent decades in traditional financial services. So we can have an understanding of how the existing financial system works, and then marry that together with what is possible through crypto and blockchains. I see a lot on like crypto Twitter of like people that just have one or the other, and those don't tend to work in my mind. You need to try to figure. We're going to be merging the two types of rails here. We already are. We're going to be merging those more and more over time. And I think you need both sets of expertise to really make it work.
So let's talk about a particular example of merging those worlds and something that you guys have been very successful at over the last few weeks, couple months, which is your BSOL ETF.
Yeah.
It's an ETF which you call, the greatest innovation in financial markets, and then it's staking on Solana, or actually the Solana tokens in the ETF. Can you tell us more what the difference is between this ETF and other crypto ETFs that don't have staking, and why is it important not just for the holder but for the product itself?
Yeah, it's a great example. I actually think it's a little underrated how much ETFs are kind of representing the nexus of that crossover between crypto and TradFi. Because ultimately, what is one of these spot ETFs? What is it? It's a pool of the underlying crypto, right? Now we take the crypto and we put it in a third-party custodian, and then you issue shares that can trade on the equity market so that people can get them in their brokerage account and get access to that underlying asset. And so it really is kind of like the merging of the crypto with the TradFi. Some of the purists used to say to me, like, oh, what do you need ETFs for? Like, crypto tokens are already tradable and freely accessible. So there's some sort of like philosophical pushback or disagreement on the need for them. The reason you need them is because in 2024, 2025, it's just still the case that most investors access their entire financial lives through the traditional financial system. So they have a brokerage account, they have a financial advisor, they have an app like Robinhood or what have you that allows them to access stocks. And an ETF trades like a stock. And so it's the easy button for people who are not quite like us that are going to figure out how to download Phantom and Ravi and MetaMask to get these exposures. And so that was the big thing. And that is why I think not just Bitcoin when it launched, but our Solana ETF, which is the first spot Solana ETF in America, has been so successful because people like us who are following crypto every day and we're on crypto Twitter, we'll go and get Sol on however we want it, in a decentralized exchange or on a centralized exchange, and we'll get it that way. But most of these investors are not going to get it that way still in 2025. I believe that will change in the future. But in 2025, this is still how they're going to get it. Staking is really important, particularly to Solana, because it throws off something like 7% annualized. And so in order to recognize the true value from an investor, for an investor, you need to be able to earn that reward for them. And then I think philosophically about what you're doing, and something that we also care about deeply is these protocols, their ecosystems, and being good stewards of them. Philosophically, right, what you're doing when you're staking is you're securing the network, right? You're running the validators. You're delegating your tokens so that a validator can extend the blockchain, can propose blocks, confirm transactions, do the things that the network needs to do to actually operate. And so for all of those reasons, I think it's super important.
No, I think it's an awesome development. I'm pretty excited to see it. Obviously, the Cambrian explosion of ETF filings, at least, has been wild to watch this year. Again, as somebody that spent a better part of 7 years, my time at Barclays dealing and trading ETFs.
Yeah.
It's something that I hold dear to my heart, product-wise.
Yeah.
So seeing so many, filings come to market, again, filtering from what crypto Twitter thinks is going to happen to what maybe realistically is going to happen. Do you see every single crypto token having a successful ETF? How do you define success for an ETF?
Yeah. So the answer is no. Not every single one can have a successful ETF. I think that there's a huge power law in our market in general, right? And I think that a lot of altcoin enthusiasts can forget this. It's like Bitcoin is the main stage. And when Bitcoin is doing well, it allows other things to flourish. When Bitcoin is not, it kind of sets the mood for the entire ecosystem. I think that over time, it's hard to predict how many additional assets there will be, but like the top 10 or so, I think Bitcoin was very important, most successful ETF launch of all time. Ethereum from there was very good, very strong, much better than a normal ETF launch, but not like the Bitcoin ETF launch. Solana for Bitwise was massive. I think that Solana is in that position where it really matters as the project that is. It's not Bitcoin, obviously. It's not Ethereum, but it's this alternative. It solved some of these speed and throughput issues. The chain, as you know, you've used it, you've worked on it. It's pleasant to use. You don't get the same type of like blockchain experience that people who have been in crypto for a while are used to. After that, we've just done XRP as well, and that's done well. After that, for now, it starts to get to be a little bit more of a long tail. And I think that could change over time. But like to give you a sense of where we spend so much time talking about financial advisors early in our conversation, right? Like we're still in the educational and first allocation discussion with financial advisors about Bitcoin. So it's going to take a minute for them to get over the hump with Bitcoin and then get on down to the next things. And so we're going to launch more ETFs. We're excited about a lot more than just the top 4. But in terms of like the explosive growth that we've seen from the top 4 tokens, I wouldn't expect that in the short term.
Got it. Elephant in the room, NFTs and ETFs. Is that something that you see realistic, or is that something that, I feel like it's going to take a long time, personally, just knowing how things work. That and then just demand, I think it's important to the success of any financial product. But obviously, I'm on the outside looking in.
Yeah.
How do you see it from the inside?
So NFTs and ETFs are interesting because of what they are by their nature, right? There's only a single one of each. It's unique. And so one of the things that is a characteristic of an ETF is that whether it's an S&P 500 ETF or a Bitcoin ETF, is that the assets inside it are fungible, right? I have $100 million come in to the Bitcoin ETF today. I go buy $100 million worth of Bitcoin. I have $100 million get redeemed tomorrow. Then I have to deliver out or sell $100 million worth of Bitcoin. It doesn't matter if it's the first 5 billion worth of Bitcoin that were in there or the 100 million that came in yesterday. With NFTs, you have this unique thing to figure out, which is that each one of them is unique. And so how do you do that inside of an ETF wrapper? It's not clear, but it's also not clear that there's not a way to do it. We have these concepts in I'm going to use a technical term now, 1940 Act land, where the 1940 Act is the thing that governs ETFs, where you can put what you would classify as illiquid holdings up to a certain percentage threshold, 10% in certain circumstances, sometimes it's higher. But what I think you might see is, and this has been a tool that's been used for things, as you know, like illiquid debt or bank loans or private investments where you put it in up to a minimum threshold, so it's not the whole portfolio. So that's what where I would start thinking about NFTs in ETFs. But you can certainly do it as you know in private funds and private placements. We have a private placement NFT index fund, and so that's how I would start to think about it for NFTs in particular.
Yeah, I was thinking along the lines of like BKLN, which is the bank loan ETF.
Yes, yeah,
which is kind of like unique how it is. But I remember when it was one of our top products at Barclays as far as trading.
Yeah,
a lot of volume, and so that I'm like, yeah, it's gonna happen, but I think it's probably down the road.
Right. And there were a lot of questions about that when it came out, right? Like, how do you settle the bank loans? How do you know which ones you're going to buy? How much, settlement time is different for selling a loan than it is for selling a bond or a stock. So these are all things that you work through over time, and if you're creative, they can be figured out.
Nice. Well, I'm looking forward to the time because we're building a treasury of Meebits.
Yes.
With a very specific purpose of eventually, put them into a fund or tokenizing them. Because I do think that is coming. Now, we've talked about really technical stuff and obviously, traditional finance. I want to get to the actual serious stuff.
Just do
of
it.
The conversation.
Yeah.
Taylor Swift.
Yeah.
I know you're a big fan.
Yes.
I'm a fan myself. We've bonded over this.
Yes.
Why do you think it triggers so many grown-ass men on Twitter?
I don't know.
Taylor Swift is successful.
It's such a funny thing. It's like the Schadenfreude thing, right? Like where people get like jealous or nervous. Like, okay, we enjoy the music and she's an icon. Let us enjoy it, right? So I don't have a sense, but it really does. It's triggering to people.
It cracks me up. It almost kind of led me to like her more.
Yeah.
Because now, I've worn Taylor Swift shirts on stuff in crypto parties and pictures, and people were like, "Oh my God, what are you doing?"
Yeah.
They either love you or hate you. But the more hate I got, it kind of made me want to just wear them more. And that's kind of when I started just listening to more of her music.
Yeah.
And then just full blown being like, yes, this is awesome. It's just funny how behavior and to me that's just so indicative of what has always been crypto, which is the largest public kind of experiment of human behavior that you can just observe 24/7
Right.
for people all over the world. And this whole Taylor Swift situation really reminds me of that.
Yeah, it does to me too. There's also this weird thing with people where, in general, they like to hate on people who are successful and do it their own way, which I have a distaste for. It's like, you don't have to listen to Taylor Swift's music or be a big Taylor Swift fan, but she's incredibly successful and she's done things her own way, right? And so this idea that oh, you should it's like a popular thing to do online to hate on her or hate people who enjoy her music is just very tasteless to me.
I find it so funny. So what's your favorite album?
Well, 1989 is my favorite album. And then Folklore, there's a song on Folklore about her, and I think we've talked about this. There's a song on Folklore about her house that she owns in Rhode Island. It's called The Last Great American Dynasty. And that house in Rhode Island is actually in the town that I grew up in. And so I feel a special connection to this song, of course. And ever since she bought that house, it's in Watch Hill. I actually grew up in Westerly, Rhode Island, and Watch Hill is a wealthy hamlet within the town on the water on the Atlantic Ocean. And so she got this house there. And so now it's become a thing where people will drive by the house. That's Taylor Swift's house. And so I have a special connection to that song. And then I really like the new album.
I do too. I didn't like it at first. I gotta admit, I was like, ugh. But then I just listened to it a few more times, and I was like, wow, this is good. It's not the best, but it is really, really good.
So the thing is, I was talking with my wife Jenny about this too. I feel like I have that relationship with the albums that she releases generally, where the first couple of times I listen to it, I'm like, I don't know if it's as good as the prior stuff or if I like it as much. And then I give it some more time, and I'm like, wow, I actually really like this one. And I think this one in particular, this new album, she has a totally different voice and confidence in this one that I think even some of her fans have not appreciated. And I'm here for that. I'm happy for her. And I really like the vibe of her being yeah, I've found what I was looking for and I'm game to sing about it. I think that's cool.
What's your favorite song in that album?
Opalite.
Okay.
Yeah. I think Opalite's very good.
I think for me, it's Life of a Showgirl.
Life of a Showgirl's good.
But Opalite's a very close second.
Yeah.
What I like about Taylor Swift, after I really went back and listened to her stuff, after I became a fan due to just the T-shirt that I used to wear, this whole thing led me down that rabbit hole. The lyrics just are so personable to high school experiences and stuff that I don't think a lot of people just ever talk about that anymore. Like for me, like going back and thinking of when I had crushes, and obviously I'm a dude, but who cares? Like, you still have a crush.
Yeah.
There's a song "Illicit Affairs" in Folklore.
Oh yeah.
When I was in my 20s here in New York, I actually like fell in love and dated somebody who was in a long-term relationship. So I was kind of like the side guy. That's just, first time I've ever mentioned it in public. But some of her lyrics like really speak to like those very personal experiences that people don't really talk about anymore, especially in songs. So that's why I really like her music.
Yeah, and I think that like a lot of the people who are critical of her, particularly online, or who are critical of her fans, they don't have an appreciation for like the technical artistry, like the level of success, the level of commitment. I mean, this is a woman who is like grinding for years on the songwriting, on the technical aspects of the creation of the music. It's not like by accident that she's likely the most successful artist of our generation. Like, she has earned it, and she is incredibly talented at the pinnacle of world-class level. And so I always find that to be like, people who are hating on Taylor Swift or fans of Taylor Swift's like, wait a minute, like this isn't like, she didn't like luck into something. She has really, really earned it and deserves all of the things that she's achieved.
Yeah, one of the things that really struck me is when they were talking about how she was practicing for the Eras tour by running on a treadmill and singing all the songs from the set list, which was like a 3-hour show. Because she did like back-to-backs, and it was, it's awesome that we still have, in a world where like everything's like digital and AI, and we're obviously trending in that direction, that, there's humans that are able to create art that still brings that level of, I was surprised at the Eras tour. It was my first Taylor Swift concert.
Where did you see it?
Here at MetLife.
Oh, amazing.
Where like people were so into it for the whole 3 hours and really feeling it. And it was the loudest place I've ever been to. It was, to me, I was like, wow, this is incredible.
Mm-hmm.
Again, you don't really get that anymore. At least I haven't seen it in a long time. Maybe sports do that here and there, but from like an artist, a performer like that. So yeah, I'm cheering for her, and obviously everybody else that's an artist and putting themselves out there. But yeah, Taylor Swift, I don't know, man. It's such a funny topic to bring up during like crypto conversation or crypto podcast.
Yes, I love it, and and I love the music. Like, it is what it is.
I am guessing Bitwise Meebits suite at the next Taylor Swift concert. You said you had alpha for the wedding.
Oh yeah, so the word going around in Westerly, Rhode Island is that so there's a beautiful luxury hotel that is just sort of down the block. I hesitate to call it a block because it's like a small street of like high-end homes that are on this bluff overlooking the ocean. But the word that is going around the town is that there is a weekend in June that the entirety, June 2026, that the entirety of that hotel was booked by one unnamed acquirer. And so that is the local word in Rhode Island, is that's what's going down.
Oh, you heard it here first, folks. Taylor Swift wedding alpha on the Meebits podcast.
That's right. This is the important stuff. We love
very important stuff.
Yeah.
For 1940 Act, we discussed at length.
Financial advisors, Taylor Swift wedding, tune in.
Boom. Just to wrap up our conversation, which obviously has been very wide-ranging.
Yeah.
NFTs. I know you like them. You mentioned you have the fund. Obviously, you collected a Meebits recently. Thank you very much.
Yes.
What's your, like, when you talk to people, do they ever come up when you're talking to, financial advisors, professionals, investors? And if they do, what do you tell them? What kind of reception do you get?
Yeah, I'm glad we finally got to NFTs and Meebits. We didn't get to it to this point in the conversation, but I'm excited we're finally here. Before I got into crypto for work, we had sold this ETF company. This is the sort of 2015 to 2018 era. And I was working at a large asset manager to manage this transition of the prior business to be integrated with a $500 billion asset management company. And that's when I got into Bitcoin. And everyone who's in crypto, I think, tends to have like a light bulb moment that has gone off. They're like, wow, this is the thing that I need to be working on. And when I had that moment for Bitcoin, it always stuck with me. And I've always had this conviction and confidence that like drawdowns don't really matter, like the current regulatory regime doesn't really matter. This is the thing. It's for the next 100 years, as everything moves online, we're still like in this weird phase where people don't realize that literally everything is going online. Like we're like half a foot stuck in like the 1980s where things happen offline. Like banking happens offline. You go to a physical bank. In 50 years, like all the offline stuff doesn't matter. Your entire financial life is online. And so like I just had this crystal clear conviction about Bitcoin being the first digital store of value. And as it relates to NFTs, I have a very similar view. Like in my mind, Bitcoin was the first thing on the internet that is not copyable, but it's Bitcoin and it's fungible. Non-fungible tokens are so important to the future when you think about it. Like if everything's going online, art's going online, every unique asset you can have is going to go online. You must have non-fungible, unique tokens to live in that environment. And so like I think, we had this very frothy period, obviously, where NFTs and different types of NFTs got bid up in terms of current price. But it like doesn't matter to me or to my view on them. I think that they're going to be an important part of the future of assets when they all live on the internet. And that's one of the reasons that we have an NFT investment vehicle at Bitwise. Kind of like just like the ETF conversation, kind of hard to figure out how to do it. Like how do you implement it? What do you buy? Where do you hold them? It's not as simple as sticking the Bitcoin at a third-party custodian. But investors do bring it up. We have high net worth individual investors that are in that fund, and they all want to understand the outlook for NFTs. And financial advisors are not investing in it, but they ask us about them. And I think that it's sort of like on the long. It's like the long trajectory of how the world goes on chain and crypto becomes super important. It's like we're in this super choppy early adoption phase, and over time that's going to go away and the trend is going to become clear. You think about, I have 4 children, right? They're all 11 years old and younger. If they grow up and become art collectors, are they going to own a bunch of physical art? I mean, maybe a few pieces, but certainly their entire world growing up is going to be online. And so that's kind of the way that we have that conversation and some of my views on NFTs.
Yeah, no, I completely agree with you, obviously.
Yeah.
I think, I see like to your point about going online. For me, I was in my early 20s working at Goldman when Tinder came about.
Yeah.
Right. And it was one of those things where it was like dirty to have a Tinder app.
Right.
But now like over 50% of marriages like started online.
Yeah.
And so to your point, the non-fungible things, which are part of our everyday in the physical realm,
every day,
are very important in the digital realm. Now, will every single NFT that got minted or bid up during the crazy 21 cycle matter or be worth something in the future? Probably not. I mean, you see it with all the crazy ICO coins from 2017, right?
Yeah.
Very few of them withstood the test of time, just like you did with like NASDAQ stocks in the late 90s.
Yeah.
But those that, do survive, I think are going to be extremely important for the composition of not just portfolios, but everyday online, on-chain lives.
100%. Also, I mean, you see it with art as well, right? Like every person who puts a paintbrush to a canvas doesn't create a Picasso that's worth $10 million, right? Like there's thousands and thousands of pieces of paper with paint on them that are technically art, but they're not worth anything. So there will be hundreds of thousands and millions of tokens, fungible tokens, non-fungible tokens, things that were supposed to be art that will be worthless. But then there will also be very, very important, and I believe very, very valuable early examples of NFTs that are art or NFTs that represent other things that over the long term will become incredibly valuable. And I think that's going to be an important part of our ecosystem. I think, as you know, right, like a lot of early crypto wealthy consider the NFT collection that they have to be an important part of their identity and their portfolio. I think there's a very big underestimation of how much crypto wealth is owned by individuals is going to change our markets in the future. I mean, Tether, we just saw the stat yesterday. Tether was the largest buyer of gold in the last quarter compared to any central bank. They're a bigger buyer of gold, physical gold, than any central bank. Tether, the company Tether, also just bought 10% of the shares of Juventus, right? The famous Italian soccer team. What does that tell me? Or what's the point that I'm making? It's a little circular. The point that I'm making is that the crypto wealthy, which will become an important part of our future, just like railroad magnates and oil magnates and industrial production conglomerate magnates were an important part of the last 150 years, those people are going to invest in NFTs as art. I'm very confident in that. And so I think that it's a very important part of the culture, and I think it's going to be a very important part of what is technically available because of blockchains.
Yeah, no, totally agree. And that's honestly, like, we actually do believe Meebits are art, but a big part of what we're doing is really helping the world, a lot of education, like you guys with Bitcoin and the ETFs, really the world understand why they're art or next generation art, and obviously building like a fun culture around them. But at the end of the day, for us, the main thing that we have as our North Star is that Meebits are art. So we're excited. We're excited to hear that view from somebody who spent so much time in not just traditional financial markets, but also has been part of the real trailblazers, building, bridging the world between TradFi and crypto, and everything that you guys are doing at Bitwise. There's been an awesome conversation today. I wish we could go on for hours.
We could go.
We could probably go on for hours.
Get a record player in here. Spin up some T Swift.
Oh, hell yeah. I actually did buy one of the special Spotify own exclusives, packet with a sweatshirt, and I got a record. I don't have a record player, but I have the record there. It's orange and it's really pretty.
I have it as well. I have the record because we've been listening to records recently at home. It's kind of fun. You can get a record player pretty easily, and I have the Life of a Showgirl on record as well. So
all right, so
for the
record, next time we're doing Taylor Swift listening session.
Yes.
Alongside some ETF education.
Beautiful.
And discussion of the 1940 Act.
All of my favorite things.
Teddy, amazing. Thank you so much again. You guys super busy. Obviously, we're about to go into holiday week, so really appreciate you taking the time, not just to be here, but to share your experience and your ideas with our audience at the Meebits podcast. And obviously, thank you for being part of the Meebits community.
Yeah, thank you for having me, and thank you for all you're doing for the Meebits community. I mean, I think those of us who are Meebs holders, like you said, the Meebits are art, telling that story, making sure that the community feels like they have a place, a North Star for all of us, is something that I want to thank you for here. So thank you.
Appreciate it. Thank you, guys. This was episode 17 of the Meebits podcast with Teddy, president of Bitwise. We'll see you again soon.